Уважаемые коллеги,
Dear colleagues, so all speakers are present here. It's 3:05, so we can start. Dear colleagues, ladies and gentlemen, on behalf of the European Economic Commission, I would like to greet you at this event dedicated to formation of single financial market of the Eurasian Economic Union. There's a number of wonderful speakers here in this dais. I'd like to introduce them alphabetically, country state-wise. We'll start with Armenia, Vakhtang Abramyan, Deputy Head of the Central Bank of Armenia, Sergei Kalechits, Deputy Chairman of the Board of National Bank of the Republic of Belarus, Daniyar Akishev, Governor of National Bank of Kazakhstan, Nurbek Janish, Deputy Governor of National Bank of the Kyrgyz Republic, Ksenia Yudaeva, First Deputy Governor of the Bank of Russia, and my colleague, Tatiana Volovaya, Minister in charge of Integration and Macroeconomics of Eurasian Economic Commission. Dear colleagues, the global market is in growth. According to the data we have, 3.8% of growth. The economies of countries of the Union switched to growing too. Into 2017, the GDP growth was witnessed in all countries of the Union. Inflation is close to a historic low, as we have a balanced budget. And in terms of business climate, in Russian Federation ranks 35, Kazakhstan 36, and Belarus 38. And there's a huge progress that we witnessed recently. At the same time, many experts assess the growth as not really stable, and some worrying about protectionism, elements of trade wars, and sanctions. On this backdrop, demands to regulate financial markets are very high. And truly important is the formation of a single financial market inside this union, and our legal parameters are defined in the treaty. According to the treaty, the single financial market should should satisfy several parameters. There's harmonized demands for regulation and overseeing information market, and mutual acceptance, acknowledgement of licenses in stocks and shares, and legal aspects, which are going to be done at the basis of administrative cooperation between these bodies. Information of a single market will help consolidate national financial markets and grow the volume of available investment resources, will decrease dependence on negative exogenous factors. In December 2017, our presidents told the governments and central banks to prepare the concept of a development or formation of a single market. There's work going on this document, some tough discussions, but they're very constructive at the same time. So we really hope that in the nearest future we'll manage to find the better optimal decisions, and will provide them for the presidents. It would be great if in our framework of our today's discussion, our speakers could share their visions of tomorrow and the day after tomorrow of the financial markets. And in this respect, I would like to formulate the common question for all speakers. What national effects do you expect from the integration of financial markets by the year 2020 and and further on? I would like to have a follow-up to this question, a very more specific question. I'd like to address every speaker separately, namely Tatiana Dmitrievna. A treaty of the Eurasian market envisages formation of a single market in different sectors of the economy, but our countries agreed to have a common, balanced macroeconomic policy, with countries fulfilling several macroeconomic parameters. That's level of inflation, state debt and the budgets, and a number of things show us that the implementation of this macroeconomic policy influences the level and dynamics of development of national financial markets. It's very important to keep macroeconomic stability for formation of a single economic market of the Eurasian Economic Union. It's very important for us to take into account both successes and problems that other regional integration formations face in Europe, in Northern and Southern America, in Asia, and in Africa. To compare with the negative and positive experiences with our experience of Eurasian economic integration, that's very important for defining our prospects and formats of our interaction. So, I'd like to ask you the following. How should we take into account the experience there is in the world, experience of integration in currency and in markets? Thank you. What can we learn? Thank you. I would like to, first of all, this treaty on Eurasian Economic Union and this Eurasian integration process uses very actively the world experience. First of all, European Union experience. If you look at our institutionality and our terms, they're very similar. But we said at the very beginning we should use the experience, but we shouldn't follow it, copycat it blindly, because the Europeans took a very zigzagging road and tortuous road to it, and we shouldn't repeat it because some mistakes were made, and we don't have to repeat those mistakes. We have to go further. And we're different. The structure of our economies, and they're different, and we should take it into account. And the third thing that we keep forgetting, the time. The Europeans developed their concept of the currency union in the 70s. At the time, there was the Bretton Woods system, there were fixed parities, and then this system broke down. They built on it, and many approaches that they had, that they introduced, those were the approaches of the 70s, 1970s. And now we live in different times, and we should practice different approaches. So, hence the demands. So what we took into account and we didn't take into account, and what we should take into account and we shouldn't. I should start with, like Rui said, that we have this agreed common macroeconomic policy and criteria of convergence that we took from the European Union. I'm looking at Edwila Sigibzadon. She remembers well how we fought for, in this package to have this commonly agreed macroeconomic policies. Many opponents said, why do you need this criteria? Why do you need this? This is Maastricht criteria of common currency. So we don't want that. But we said, no, we want stability, macroeconomic stability in our single market. We shouldn't have ups and downs in currency. Europeans didn't need these criteria when they had Bretton Woods and the fixed parities. As soon as they needed it, they got it, regardless of the introduction of a common currency, so single currency. So we have these criteria, and we use what we can get from the treaty. Over the past 2 years, together with the countries, we worked on 7 recommendations of when those criteria were violated, and we think this good work has been done. We see the crisis of 2014-2015 showed that this is not enough, because although in this treaty we have this agreed common macroeconomic policy, but we have to sign a certain document on the level of presidents of this macroeconomic policy. We have consultative bodies, but it's not enough. So we started to work on the following directions where we can deepen our cooperation in the macroeconomic area and the currency area. So as soon as we faced the problems, many hotheads started saying, no, you have to introduce a common currency, then you'll get rid of those problems. But this topic comes up from time to time. But European experience shows us that right now we don't need common currency. The main thing we get from the European experience is that we should set the goals right and find instruments that help you reach the goal. Common market, single market, that's the goal we have, they have. But do we need this common currency, single currency? No, we don't. Why? First reason, why did the Europeans introduce this single currency? To minimize our transfers, our costs. That was the main task. But they have this trade is still was like 66% of the whole trade, internal trade. It's a great number. Here, it's about 14% in our union. It's been growing recently, but it's still 14%. So for some countries, for Belarus, it's 53. That's pretty high. Kyrgyz Republic, Armenia, yeah, it's pretty high. But still, it's not enough, not high enough to justify introduction of single currency to minimize transfer costs. The second task Europeans had, they had a currency union in a way. It was asymmetric. They had the European currency system. The Deutsche Mark was the main one. It's a national currency with a national emission center, national monetary and credit policy. In many countries, like France, tried to create a symmetrical currency union to get rid of those disbalances. So to have a one policy, single policy from one center that takes into account interests of all states. We have a different situation here. Although Russian ruble is actively used in our common transactions, it's not dominating on in our union. And we prepared a very interesting report about the use of national currencies. We should use more national currencies. If you take a Russian ruble, its share in our, it's like about 77% of all transactions. But if we put away trade of Russia, but we take trade of other countries, unlike the situation in the European Union where like Italy and Belgium used Deutsche Mark actively. Now here the share of Russian ruble is only 20%, and it's going down. It's falling. In 2013, if we don't take into account trading with Russia, with 31, now it's 20, and in bilateral trade, the role of Russian ruble has grown. In 2013 it was 63%, now it's about 75.9%. So both cases it's the effect of sanctions. So in bilateral trade, ruble has been used more and more often, and but in third parties they go to other national currencies. So we have different task. We have to balance the use of national currencies. So we've been talking about it for quite a lot. There are some interesting figures that I think it's a follow-up of the discussion that we had before about the use of national currencies in transactions. Like Armenia, for instance, exports its goods into Russian Federation, and is paid for the export. By 73%, it's Russian rubles. That's a very high figure. But when Armenia buys in Russia, they import, they pay by Russian rubles only 34%. That's the greatest discrepancy we have in our Eurasian Union. It's a structure of trade. It's fuel, right? Fuel carriers. But it's this balance that we have to tackle that. With Belarus, it's more smooth. It's 90% for export and 80% for import. But there are certain agreements for ruble shipments. In other countries, those discrepancies are smaller in the trade structure, but still they're there. So we have a task, wider use of national currencies. Why do I want to bring it home, this topic of national currencies? For Europeans, introduction of national currency was sacred. There was some sacred meaning to it. They thought that it would give the economic Union and inevitability. But we're less naive than the Europeans. We know that no single currency, even no single state, can keep a union from breaking up if it's not effective, if it cannot develop efficiency and answer the challenges of the time. So what should we take from the European experience in a nutshell? First of all, should widen cooperation in the macroeconomic sphere realm and find more flexible instruments. The criteria of convergence we have, it's good, they recommend it, but we should widen the possibilities of supranational by influencing countries and aiding countries. And second, we need regional financial institutions. We do have now European Forum of Stabilization of Development, European Bank of Development, but they legally have nothing to do with the Eurasian Economic Union. And if one of our countries has a problem, we as a Commission giving recommendations, we cannot support it with some financial resources. It's a very important topic, and we can find it in all our reports. The use of national currencies, yeah, that's also very important. And it's important to look at the Europeans and see the new trends like cyber currencies and regulation. We should understand now countries in the financial sector, we're creating new legislation. We should start it from scratch as a single legislation in order not to harmonize it later, getting rid of barriers later. So, yeah, thank you very much, Tatiana. Dmitry, just one remark. You said we have such elements of, you have Eurasian Bank of Development, Eurasian Bank. Yeah, thank you very much. One more question now. I'd like to address it to representative of the Bank of Armenia. Please. An important infrastructural element of economic integration of Eurasian Union is the integration of payment systems. This should decrease dependency of our economies on national currency in foreign countries and minimize risks and costs. And some countries have started taking steps in this direction. For instance, now we already have an agreement between Russian national payment card MIR and Armenian R card that allows the MIR card holders to use it, pay with it in Armenia, and the R card holders to pay in Russia. And the payments go in the national currencies, rules and grounds. Vaksan Georgievich, please, can you... I haven't formulated the question, so it goes like this: how will integration of payment system help with payments in national currencies? Thank you for your question and thank you for the invitation. It's very pleasant to be among friends and colleagues and get new knowledge and be successful and share about our successes. And the projects you talked about, the ARCA and MIR cooperation, that's one of the first real fruits of the infrastructural interaction that we had. Effective of last year. But first of all, I would like to say a few words about how we see this, the integration processes as a whole, and talk about the infrastructural interactions. This Congress, we talked a lot about the financial systems being technologies and platforms that we talk about in our countries are work or are in development. But I would like to say that only efficiency of integration depends on its system and infrastructures being technologically on the par. So how do we develop this cooperation later? There's certain ramifications we should take into account. because if there are active some working systems of financial market and infrastructure that we already have in our countries and national systems, the most efficient interaction. Yeah.
And we are talking about 2025, 2030, and it's hard to tell which technologies we will have there, and it's difficult and complicated to develop models right now. So we have to think about the evolution. And now we are talking also about the fact that almost all the countries working on new technologies, on new projects in this sphere, on the financial markets. And here I fully agree with the colleagues in that universal approach and single standards have to be elaborated, the legislation has to be harmonized, because that will be for the benefit of all the parties. And I do not exclude the possibility that we will have some single platforms that could be built and that could be used by our countries and by third parties, third countries as well. And that will enhance the accessibility towards this platform and markets and will give us material benefit. I've mentioned harmonization of legislation, and over the last 15, 20 years, every country has built its own logic into the legislation. More or less, we were guided by international mainstream trends, and today we are on the same, we are aligned with other countries in this. And we do not waste our time in order to eliminate the barriers, because we already have adopted a unified approach. And I'd like to note the following thing before we talk about the integration and our cooperation between our payment systems. I'd like to talk about two aspects. What is related to the protection of consumers' rights. And over the last 2 to 3 years, different events, we have been discussing that with the chairman of national banks. It's a very important integral part, and these institutions are active, are efficient in different countries. And I can give you an example of Armenia. We have the Financial Institute of an Ombudsman, and it is functioning quite efficiently over the last years. And I think that those elements have to be taken into consideration in this integration, legislative framework and harmonization of all those elements. Because at the end of all things, we have to eliminate discrimination. We have to ensure equal access to our markets, the markets of our countries, in terms of rendering services. And our citizens, together with the citizens of all the other countries, have to get the equal access to financial services of all the markets. Talking about cooperation between ARCO and MIR, we have adopted in real practice a number of concepts. We have been talking about free competition a lot. And as for the settlements and transactions in national currencies, we have talked about that a lot. And we were thinking about adopting some approaches at central banks and how we should make settlements. We decided not to do that, and we conducted tenders, competitions, and it was much more advantageous and beneficial as a result. And it gave us an opportunity not to use administrative measures, but to control this situation. Because for people in Armenia, it is more advantageous to use this payment card for their transactions. And in this regard, it's a great achievement, I think, if we compare that to the international experience. So it is more advantageous to use your national payment card instead of international ones. Of course, great part is played not only by standardization as it is, but it has to be a single, universal approach. We talked about international experience, and we have to pay special attention to information protection. And we have some groundwork that has been done by the participants, by the by the stakeholders of the union, and we've been working on that at different platforms, and very soon we will see the real results. We are completing some of the projects. It's for the integration of infrastructures. For example, we will exchange the information about the loan histories. And irrespective of the country, we should get an access towards these services to give our citizens this access, and we should be able to provide this information about loan or credit history for people to make right decisions. And that's most all I wanted to say. Thank you very much, and thank you for mentioning the agreement on the exchange of credit history. It is one of the basic agreements that allows us to enhance our cooperation, and then we will move towards the single market formation. We've already touched upon macroeconomic and monetary coordination in the light of integration on the international level. And now let's talk about whether we need to agree upon the monetary policy, unified monetary policy in the framework of EAEU. And I'd like to ask a question to Mr. Kalecic. Do you imply a unified monetary policy on this single market of the EEU? Thank you very much. Thank you for the invitation, for the opportunity to take part in this discussion, in this session. I'd like to start with the first question. What do we expect by 2025 and in the longer term integration perspective in terms of building a single market? And I think the question is, why are we doing that? Why do we integrate our markets? We have our national sectors, national markets and economies, and we are trying to protect the producers and vendors of services, no matter what country we are talking about. And we are trying to provide this feeling of reliability and sustainability for vendors. The idea of integration of financial market is fundamentally different because it is based on a serious tool, which is competition. And this competition should be free to a maximum extent, should be very efficient. And more than that, a fair competition of all the markets in the framework of the EEU it's the most important goal that has been set for us. Undoubtedly, at the first stage, it gives the consumers advantages, consumers of financial services. First of all, they get broader possibilities and a wide supply. It's a more complicated situation for producers and manufacturers, but in terms of the development of competition, it is also for the benefit for the producers because actually their national economies gain from that, and the single market gets the synergy effect because different aspects are evenly distributed on the market. And I think that if we move towards the implementation of these plans by 2025, we as consumers will have more advantages in terms of using financial services, and our vendors, our financial intermediaries will have the possibility to compete freely on our single market. But of course, for this market to be able to use advantages on the external markets, it will take longer period of time. We are talking here about 2030 and a longer term perspective. And speaking about agreed and coordinated monetary policy, can go back to what Tatiana mentioned, and she praised us for having settlements in Russian rubles, which almost equal our settlements in national currency. And she talked about the monetary union. We have a very interesting experience in that, together with the Russian Federation back in at the beginning of the 21st century. We were getting prepared to introduce a unified single currency. We tried to harmonize monetary tools. And of course, we do have some differences, but tools and approaches are very similar. But finally, we made a decision to adopt a different approach, not to introduce a single currency, to focus on the staged approach in accordance with the logic that has been mentioned by the colleague. And now we are talking about the single financial markets of basic structure. That will be the market that has harmonized requirements for regulation and supervision and gives possibilities to openly operate at all geographical segments for all vendors, producers of the services. And all the economies are facing external shocks and perturbations, and monetary policy is one of the tools of meeting those challenges. But we are using these tools in different ways, and when we have a common single financial market, the approaches will be different, because the external shock will not be external anymore. It will be a common shock, a common perturbation. And it would be very complicated to have a different monetary policy. It's difficult to imagine that because, for example, the cyclical character of the economy could get more complicated. So the response is quite evident. We will have to do that, and we have to seriously deal with that. We have the consultative bodies for our 5 countries, and we are not only talking about harmonizing the approaches towards building a single market, harmonizing the tools, but even now we are consolidating the policy. We are getting the information about the policy that is embraced by our partners. The same applies to monetary policy. And the common challenge we are facing, we have a large share of trade cooperation with third parties. And in the framework of this single market, we will have to combine our agreed, coordinated policy with the necessity to react to these external perturbations. But as the single market develops and as this potential is unlocked, it will serve like a buffer, and it will be very important to have an efficient operation not only of the market but of all the space in general. Thank you. Thank you, Sergey. And now, as it has been already mentioned, there was an assignment given by presidents to the central banks of our countries, and the Eurasian Economic Commission is working on building the single market. And the key question is how do we envision this single market by 2025? Which market will be the part, will form the part of this market, and what will be the roadmap for that? What will we have to harmonize, and what documents should be adopted for this purpose? We are facing objective reasons in terms of building this single market. For example, significant differences in the regulatory framework, the local requirements, the difference in the technical developments of financial markets. Somewhere we have SROs, and we have different powers that are given to regulators under these conditions of self-regulations, and we do not have specialized courts in all the countries of the EEU in order to settle the disputes. And that's why we have very special topic, the powers of the regulator on this market, which in accordance with our agreement, the market should be built by 2025 in Kazakhstan. And I would like to ask a question to the representative of Kazakhstan. What does the single market mean? And can the financial institutes operate in all the markets of all the countries? And as for the institutions in different countries, how will the supervision operate under those conditions? Thank you very much for the question. If I'd known the answer, would have written about that and would have published it. And for the last year and a half, we have been discussing those issues in terms of practical implementation, how we envision that. And we have not reached an absolute consensus because we have an evolution of understanding of what our economy needs, of the extent of how we will form and build those institutions. We are not talking about the supranational body. We have to understand the basic principles for these bodies, how they will function, because the integration has already taken place, and we have these financial institutions in all the countries. They have found their way to function, and we would like to facilitate it. We would like to improve it and to make it faster on the market of services and labor market. We have liberalized that to a large extent. And what do we need to do the same for the markets of goods and services? So that is the key question. So we are building a single market in order to cater for all the interests of all the countries. The regulator is protecting the national market, and that is also the evolution of our mindset, and it will take time in order to change the perception. Probably we will come towards a more integrated model. Maybe it will not happen. Probably someone will find the arguments in order to facilitate the functioning of the systems, but still preserve some sovereign elements. So we are discussing all this wide range of aspects and issues almost every month. We are focusing our attention on that. We are talking about the protection of financial service consumers, SROs, also the development of each of the economies. And we do not have the right not to talk about that when we are building a single market. So that is what is related to the powers of the bodies, of the future bodies that will deal with those aspects. As far as I understand, the EEU agreement sets the framework for this segment. The basic directions and the addendum specifies the direction for integration. Our task is to implement that in the right way because all the countries are different. We have exporting and importing countries. And the economic development is different. So we have to find the common ground of how we will be implementing that. When talking about supranational powers of this body, we are talking about the infrastructure of these solutions, but we are at the crossroads. We understand that the development could be done faster or could be done slower, and some segments will be at the end of the line, and it is very difficult to predict how it will develop in future and what will happen by 2025. Well, this body is already in place. But I'd like to go back to the origins.
Why are we doing all this? Good questions were raised. As regards to the use of national currencies, that's also part of big work we're doing. So we'd like to make life easier for the businesses that works transborderly and inside the countries, and to decrease the currency risks and transaction costs. And if national currencies work fine, that's great. We support it, and it doesn't matter if priority is the Russian ruble. If its currency risk is lower, then this business subjects are going to use this currency. If there's volatility with a different currency, because business is going to try to minimize the costs. And in short-term perspective, business chooses what's profitable for it. In long-term perspective, I know, as far as I understand, the integrational forces, integrational competence allows to see something beyond the horizon, allows to see the synergy effect, and we should create opportunities. And right, it was said that coordination of a credit policy is a very important, significant issue. To what extent can we find these common solutions to minimize the risk? And I shall repeat, business doesn't vote for politics. Business votes for money. Whatever's profitable is going to be used. So in this, we're greeting this. If the currency risks are minimized for people through use of national currency, it's great. We're going to create the necessary infrastructure, and we're working actively in this, in using national currencies. And I think that maybe starting from these common, simple things, the evolution of the financial market is going to grow, and the financial market is going to be offered by the institutions, well, not national currency, if they're regulated in our legislations at roughly the same level and a harmonized basis, with easy access to the markets, is going to decrease risks for businesses. So I'm being very pragmatic about it. I support all elements of integration, understanding that it should be just profitable for the business. If it's profitable, it's going to work. The Centimeter said the same thing about this good approach in studying mistakes, not repeating the mistakes, not doing the same thing. Yes, I think I never answered the question how this body is going to be organized, how this single market is going to be. There's no just one answer, clear-cut answer, if so everybody says, okay, we got it. We're trying, we different crises, and we tackle them differently, and we find this solution. Thank you very much for this honest answer. The audience really appreciated it. We listened to Elvira Zigzadin's speech at the opening. Over the past 10 years, since the global financial crisis, a great number of regulatory attempts have been done by Russia, Kazakhstan, by state bodies, and at the same time, these regulations are in demand. But at the same time, we should really think about harmonized demands to overseeing in the common financial markets. This is a very difficult assignment, very difficult task, but together we're going to sort it out. Thank you. Dear colleagues, like we already mentioned, member countries are going to try to use national currencies widely. So the formation of this single financial market is going to help growth of role of national currencies, both in payments and in assets and in banks and the real sector. So let's talk about dollarization of economy. You know, the dollarization of economies leads to decrease of efficiency of internal monetary and credit currency, and doesn't allow banks to regulate the process to a huge extent, and the crediting of banks in foreign currency of non-hedged bodies, and it limits it increases the risks of the system as a whole. That's why the member countries of the Euro-Asian Economic Union are highly dollarized. They're still vulnerable to this negative influence of external shocks. So I would like to address this question to Nurbek Jinish in Kyrgyzstan. Currently, the share of deposits in foreign currencies decreases from 64 to 45% this year, and there are fewer debts and credits, and it's a good trend. We hope it's going to continue. So, Jurek Jimicic, what do you think? What do you say? To what extent integration can influence the de-dollarization and decurrencyization of economies? And what risks come with high dollarization of economies? Thank you very much for your question. Good afternoon, dear colleagues. First of all, I would like to thank you for inviting me here and for this opportunity to take part in this discussion. I would like to start with the first question about the effects that we're expecting from deepening integration. So what do we expect? First of all, it's more profound coordination between the members in our macroeconomic policies, which will lead to sustainable and stable functioning of single economic space. And like we've said before, we're expecting intensification of mutual payments in national currencies and the growth of share of national currencies in mutual payments. Well, objectively, the best it's the big economies like Russia and Kazakhstan, to a less extent, stand higher chances. But the partners of the Union carry the risks, and we should minimize those risks. Also, we're expecting development of mechanism for providing macroeconomic stability and a coordinated currency policy. At the same time, I should also say that the basis of the Eurasian Economic Union is the freedom or free movement of capital, services, goods, and labor. And in this light, we have a coordinated policy provided by the treaty about the EAEU and coordinated policy in financial markets. The pledge of the development of these markets is complex development of all factors of production. I would like to draw attention to the implementation of free movement of these goods. But it's hard access to goods and the infrastructure of certification and the borders between the member states. That's a problem. Difficulties with transit of goods that go through the third-party countries. And also, we still have some limitations on free movement of labor because people are not enough informed about this, both the workers, the migrant workers, and the law enforcement officers. So by 2030, we're going to lose all these barriers, which will help the economy of the member states grow and will raise the competitiveness of the member states as regards to dollarization of economies, because in integration and creation of a single market of this union, we cannot imagine this without the low level of dollarization and a high level of trust to national currencies. And integration can influence of these de-dollarization, but there are different factors in play. In many countries, this level of dollarization is high, so we have this very urgent task of to dollarize economies, but it's not enough for de-dollarization. In this situation, in the economies of there are many external factors, and they are vulnerable to external shocks, and financial systems, as you know, are vulnerable to currency risks, credit risks, and risks of non-payability, non-solvency. And also the volatility of currency rates can create problems for state budgets of these countries. As we all well know, economies with a high level of dollarization, the efficiency of monetary and credit policy, and national banks, state banks, cannot regulate the macroeconomic processes to a large extent to reach the goals they have. After the crisis of 2014, in the first half of 2016, at the backdrop of devaluation of national currencies, we saw a process of de-dollarization in this Eurasian Union, and certain steps have been taken, and the states and the central banks of the Union took certain measures to, at the same time, in currencies, and which led to development in the area, and certain other measures have been taken, and there's active use of differentiated norms of reserves and crediting in foreign currency, and decrease of currency risks. After stabilization in financial markets in 2015, 2017, we'll witness a decrease in dollarization in the Union. And in Russia, dollarization of deposits of population organizations dropped to 28%, in Kazakhstan from 54 to 47%, in Kyrgyzstan from 51 to 47%. At the same time, dollarization of deposits in Belarus and in Armenia over 2016 and 2017 stayed at high levels, about 60%. So if we talk about the credits, and in 15, 17, the dollarization of 60–70% was always seen in Armenia. In Belarus, the same period it was about 55%. In Kyrgyzstan, 46%. In Kazakhstan, 31%, and in Russia, 19%. There's a tendency for de-dollarization we've seen in the Union recently. It will also increase the efficiency of our policy and will become another stimulus and incentive for integration in the Union. In external trade, unfortunately, dollar dominates, and raw materials orientation of export means we're dependent on the world market prices. So we use national currencies for investments and contracts and payments and all payments are according to the agreements that are between the sellers and buyers. At the same time, inside the Union, we see tendencies for growth of the role of the Russian ruble, but major transactions are still made in US dollars. Another negative factor in pressure on the national currencies is trade disbalance. Trade balances in Kyrgyzstan and many members of this union is negative. In 2017, trade balance was minus 2.4 billion US dollars. In Armenia, deficit was 1.5 billion US dollars. In Belarus, $9 billion. And in Russia, in Kazakhstan, we see the positive trade balance, 115 and 17.4 billion US dollars, respectively. One of the methods of fighting this dollarization is the growing role of national currencies, which has been mentioned already. The Treaty of the Union speaks of the growth of growing use of national currencies. Currently, the countries are going to move closer in economies, and this is prerequisite for many countries to use these new mechanisms, the use of national currencies in export. Nurbek Zhinishvili, we have certain regulations where time-wise, so I would like you to go faster if you can. Well, actually, this is it. Well, thank you. Thank you. Dear colleagues, recently, the financial technical industry has been growing actively in the world and in the countries of the Eurasian Economic Union. But new technologies, together with what they actually bring, the new opportunities they bring about, and changing processes, but they bring about both macroeconomic and microeconomic risks. And in this respect, we need to work out coordinated approaches to regulating the financial technical industry in the countries of the Union, but they haven't been developed yet. So in this slide, I would like to ask Ksenia Valentinovna how the new financial technologies are influencing new integration processes and how we should tackle regulation of financial technical industries in the Union. Well, thank you very much. According to a tradition where I'll start with the first question and then come to technologies. A lot has been said. I'd like to... we have 174 million consumers here. I listened about our colleagues in the use of national currencies, about 115 trillions of GDP and about 50 trillion of savings and trillions of investments. Is a huge market to get some extra opportunities, extra effects from integration. Of course, 14% of mutual trade, that's not enough. There's still some potential to grow. I understand that there are some major exporters, oil and gas exporters, but even if we don't take into account the world expert in these two sectors, but still, whatever's left is enough. I mean, this level of mutual trade will be not very high. So always some potential to grow this investment integration and trade integration, and financial market is one of the instruments of this process. But we live in the era of services. The sector of services is becoming the leading one in economic development. So if we look at the data as regards to Russian economy, this is exactly what is going on. We see the industry is going, doing not very well, but the services go really well. So we see the development of this ever-growing, fast-growing development of services. So with the services sector is important both as an auxiliary sector and also the sector that has has its share of GDP and employment and the efficiency of use of human capital in our countries. That's a very important sector. So, of course, we should integrate. How we can integrate, at what speed? where can we find ourselves by 2025? Well, we should look at this situation in our countries. And today, for the whole morning, we were discussing the situation in Russia and the Russian financial sector in regulation, and still there's some processes going on. We should really finalize them so that we can start regulating, we can start integrating without these risks. And Dmitry, I thought she was going to mention that, talking about the European experience, but she focused on the European experience in macroeconomics. But I'm in charge of financial stability, and I feel closer to the experience of regulation in finances, financial stability, and financial integration included. So in preparation for this, we found a recent May 2017 survey of financial integration Europe of the European Central Bank, and interesting statistics were found here. They're calculating the index of integration and price index of integration, and they're behaving in a very interesting way from zero to the end of 90s. This index grows to 1, like 90%, 89%, and quantitatively about 50. After the crisis we had 10 years ago, that we were discussing today,
these financial indicators go down significantly with the same speed as they were growing before that. And they dropped by 25%, and the same applies to quantitative integration. And then we witness some growth after 2012, 2013, after the European crisis came to an end. And what we see is that this accelerated integration created financial risks for economic stability. And because of these risks, there was the slowdown of economic integration, and that has had its toll on the economic growth. And there was an argument with Ms. Nabiulina about economic sector in Europe, but the problems just got accumulated, and not all of them have been resolved. And this is one of the problems that is related to slow economic growth rates in the EU. So if we want the economic integration to foster balanced growth rates, then we have primarily focus on the economic stability and sustainability. And of course, we need harmonized regulation, but that is not enough. We also need very good supervision and harmonized supervision of the same quality. The EU has understood that without the elements of fiscal union, let's speak frankly, they will not achieve profound integration with an access of different institutions of high risks towards these single markets. They do not achieve that, because the EU was thinking initially of building a banking union for the support of the banking system. It was like a fund where the countries allocate their funds, and that could be used for the bailout purposes. So the EU is also discussing the unified system for deposits insurance and different cross-border transactions, the tools and different instruments. All those tasks they're trying to resolve in order for the financial integration to function properly, efficiently, without creating risks. And the next issue they're dealing with is the union of capital markets in order to develop not only credit markets, because they are creating risks for any type of funding. The main question I asked was, what was the question? It is about the legislation of bankruptcy. Investor who is investing money should know exactly what the terms and conditions are for the payback. For example, if the company faces difficulties, and it should be a transparent and harmonized system. That's why it's a very long process, which involves not only financial regulators, but a wider range of institutions. And that is the reason for the disputes that my colleague mentioned about the speed, about the rate with what we do, so that the integration is not ahead of other processes generating some unnecessary risks. It should serve as a basis for the improvement of well-being and living standards of people in our country, in order to achieve their goals, for example, career goals, in order to improve the life of our people. Now let's talk about technologies. Of course, it is an additional opportunity, but also it is fraught with additional risks. Nevertheless, here, if we talk about regulators, we should think about both aspects, about opportunities and about the risks. Let's have a look at what spheres have the greatest breakthrough in terms of technologies. IT, for example, we see new payment technologies, systems emerging. Blockchains can be used in some adjacent spheres, in some infrastructural services. So infrastructure, here we see the network effect and the greatest impact. Everything has to be functioning there. If we take payment system, each client should be connected to it. And here we deal with a standardization issue. The use of unified systems and standards, and that is of crucial importance. All those issues are being resolved when we are talking about the unified payment system. Also, the technologies for the data processing, big data and other technologies used for this purpose, the technologies of then access. And here, this issue of standardization is also very crucial. It seems that these technologies enable a higher level of individualization. But as Mr. Graf mentioned today, it is about the great extent of standardization, but at a different level, so that then we will be able to resolve all of it on the individual level. And we have to think about unified standards with these technologies are just emerging in order to facilitate everything for the consumers and clients. Let's talk more about the risks, the regulatory arbitration risks. The work of regulators gets more complicated. I'm looking at Valery and the risks of manipulation and technological risks. He has to do that, and we have more risks of that type. And we have other problems related to artificial intelligence, and it's a collective behavior thing. And the same algorithm have to be taken into consideration in our work. For example, I don't know whether the bank using this data processing technologies needs more capital or less capital. I'm not sure about that. And cyber risks, that is the last thing, because we face them quite often when we deal with arbitration issues. And here we need to get prepared to react properly when these technologies are emerging. We have to find some common ground towards regulating all those areas and aspects. Thank you very much. Thank you, Ksenia. Esteemed colleagues, we have representatives of business in the audience, and I'd like to give the floor to them. And Mr. Galushin Nikolai, the chairman of the board of the reinsurance Russian company. Could you please give the microphone to him? We have 2 to 3 minutes, and I hope that will be enough for you. Insurance is a part of financial markets, so I'd like to tell you what is happening in terms of integration in the reinsurance business in the EAEU. We have some prerequisites for the countries to have close ties in this area. Unfortunately, it is at the 0 level. If we take the year 2017, the reinsurance from Russia to countries, the overall amount of premium amounted to 0.5%. It is very little, and the incoming premium was 1.3 out of all the amount. There are different reasons. There are some objective ones. The international competitions, markets with higher ratings, but also regulatory reasons. And they are about the following. The ranking. Unfortunately, that is the thing. The most loyal regulator towards this reinsurance is Russia and Belarus. The requirements in Russia is B-. And if we talk about other EEU countries, we have Russian markets for insurers from Armenia is closed, totally closed, because the requirements in Armenia is higher than the level in Russia. In Kazakhstan, they have some special preferences for the countries from the EEU, and the companies should do the additional reserves for that. So if we take a look at the more capital-intensive markets, Great Britain, the EU, no national reinsurers will do this additional reserve. There are different options. We can soften the requirements towards the market, but the system will have no sense of using it. And we can have special accreditation for insurance, for supervision in the EU, taking insurers from different countries, and it will be a parallel model with the ranking system. Our company is working on that, so we are the head of the task force, and I know that at the level of insurance regulators, they are also dealing with the same problem, but we are far away from positive results, unfortunately. Just 2 words in order to sum up our roundtable today. We see that the issues of building a single market are very complicated, but we are optimistic. Why? The regulators are confident that we will implement this task successfully, and there is an understanding of how we should be moving forward and how we should implement all the stages. That is why I'd like to thank the participants of our roundtable discussion and speakers, and now I'd like to say goodbye to you. Thank you.